Hello, welcome back. Hope you had a good weekend. We are going to talk about the stock market. It is August 2nd. Hopefully you had a good July month in the market as it just melted up the whole month. Whole month of July. Let's see, where was it? Right here. Couple little volatile sections in there, like here, 1 week, but nice little melt up on the SPY. Much more than it's due. We're going to talk about GME and the option plays that I have, the premium sells I have, and yeah, sub up, like up, comment down, happy money sticks around. I've got new headphones in, so it sounds really weird, everything. So sorry if I sound like I'm deaf. Yeah, so GME sold off today. Sorry, didn't sell off. No one's selling. Don't worry, no one's selling. It came down. The price is now cheaper to buy, and that's fine. What I was kind of looking for was a support of 157, kind of this low we made on 715. We did break through that. I was wondering if it was going to wick, just like wick down here and then close up here. It didn't close up there. Market's closed now. We actually have a body down here, so it closed below that support, which makes me think that's not a support anymore. I think we're going to keep coming down on a daily time frame, a little longer time frame. Before then, it might come back up a little bit, like kind of stay flat or come up a little bit before it keeps coming down, just because we're so far away from this moving average now. If you see, when it gets pretty far away from the moving average, it likes to kind of come back up close to it and likes to be closer to that. You can kind of consider that like a shorter term VWAP, longer term. However, it doesn't have to, but it also is pretty oversold on the RSI. We're at 33 down there, and we do have this pretty strong support here today. We bounced off it at one point. Let's see, it's a little bit below the previous low of 158-ish. Came down to 155. Bounced off it and kind of retested it at the end there. So, this thing's swinging around quite a bit. And I was just mentioning today, GME gives me little confirmations. I was mentioning on a Discord, if you guys want to join, you're welcome. GME gives me little confirmations throughout some of the days, just why I believe in the play. And it's honestly just from the price action in the chart, the candlesticks. And if you don't know how stocks typically move, then it doesn't make any sense to you. But if you do and you watch candlesticks a lot, you can you can see that it's being manipulated and suppressed, and that's how I know it's just the hedgies waving high. And so I know I'm going the right way, and I know I'm still in the game here. Nothing's changed. So they slowly melted down on low volume, very boring, and slowly collapse it. But every now and then you get little peaks, and it happens. You'll see it just kind of bump up on real low volume, and it just spazzes. It's not smooth because the volume's so low, and it's not normal at all. And so you can see just different stuff. I don't know exactly what's happening, but something on the back end is happening to where it spazzes out, and it'll just have these crazy little runs. And it's not typical for any stock that I've ever watched. So yeah, it's nice to see that little confirmation throughout the trading day or the week. As far as price targets, it's kind of in the middle. So on the daily, like I said, it's bearish on the MACD. You've got red under the 9 moving average. However, we're pretty far oversold here, as well as we're pretty far from the moving average. So it could consolidate a little bit before it keeps coming down, and it might not. It might hold this floor, but I'm thinking we probably are going to find a lower support, maybe 143. Like that was kind of a doubly, kind of a strong support here, or 135, kind of at the lowest, 143, 145, and that could take a couple days to get to. Again, we could bounce a little bit and then keep coming down, but it is looking bearish. And with the market now also, I say the market is at another top and is going to be coming down. On the daily, we've got a MACD crossover bearish. We've got a pretty fat red candle today. A lot of bad news over the weekend, basically. I'm surprised the market, well, I guess I'm not surprised, but the market held up today for as long as it could, and then European closed right here. 5-4-3-10, so 3 o'clock or so, or no, I'm sorry, back here. This is when it closed. This is when European closed, and we just sold off right after it closed. Flat, and then sold off some more. So this is also kind of a head and shoulders setting up. If you see there, oh whoops, I hate when I do that. I don't really look for head and shoulders too much. We have kind of the shoulders there and then the head up here, so that's typically a sign of a reversal. If it's this way, if it's coming up and then a head and shoulders, then it's going to come back down. If it's going down and you flip this upside down and it's kind of a, it'd be a shoulder and then a head and then a shoulder, then it's going back up. It's going to reverse. So you kind of have a little head and shoulders on there on the SPY. So I think with the SPY coming down, basically that could drag GME down. Initially, it does have a negative beta, but I think it really got that reputation from in January and March and the different time it sneezed back here when I had these run-ups, because I think that was probably some positions being closed, and so it was algorithms, computers closing out of long positions, which was driving the overall market down, as well as covering closing out of GME short positions. So from these times, I think is when it got its negative beta. I think it still is negative beta, but not most of the time. Most of the time it just kind of moves with the market, unless if there is covering going on, I believe. So with that, I think SPY slowly coming down. GME probably follows suit some. It holds up a little better maybe than the overall market, but it could come down some. And then kind of just waiting on either SPY selling off heavy enough to where their long positions have to start getting closed, or their short positions. So one or the other. SPY selling off hard will make it sell off even harder because their long positions will be closed because they're over leveraged, basically, that they can't maintain this margin that they've got themselves into. So SPY selling off will make it sell off more because they're having to close long positions, or it'll sell off enough to where then they have to start closing their short as well, and then this will shoot up. So either way, it's going to create volatility with SPY coming down and GME going up, and probably some other shorted stocks too. GME is kind of the bread and butter, though. It's got the most, by far the most shorted shares, and I think they've slowly been covering the other ones that we saw in January. I read that DD on how they were kind of a basket of stocks that were sold as a, I can't even remember what the terminology, but basically you can imagine like an ETF that was sold to banks or whoever to basically invest in the strategy, and here's the basket of stocks we're going to do it with. And it was all the way, it was, you know, Express, Bed Bath & Beyond, AMC I think was in there, GME, COS, and basically that's why their charts all look very similar, even though they're totally different companies in different sectors, different parts of the market, but they all kind of got squeezed at the same time because they were all shorted together with the computers and all that fun stuff, however that works. So, but I think these other ones have been covered some. GME, they haven't really done it since for a while. So AMC I think definitely has been covered. You know, they've done the covering on there, and this could have also even been extra running up from hedgies to kind of pump and dump it, because then they could make a lot on the short up here if they started shorting it at $60 and then it comes down here to 38. But you'll see random other shorted stocks that are just kind of running here and there, and GME won't. So I think their short positions are probably smaller than these. GME, they really thought they were going to bankrupt it, so these other ones maybe they didn't have quite the same short position. So anyways, not sure where I'm going with that, but yeah, basically GME will be the biggest squeeze of all time, and maybe ever of all time, but definitely in the history, I think, of the stock market. So I was pointing to Express when I said that. Anyways, yeah, it's a good time to buy it. It's at a nice price. You might be able to get it a little bit cheaper. Again, it could come down to 145, maybe 135, test that, but the difference in that is it's pretty minor. If you think of how high it's going to go when it squeezes, if it's in the thousands or millions or billions or however high you think it's going to go. You know, the difference between $10 is pretty negligible. But yeah, let me show you the plays. Got some option plays. We've got a bunch of shares of GME. Some of you guys maybe don't know that, but I've got them in my long term. We've got 100 in this account. I've got some in here. I've got 37 in this Weeble account. Got like almost 1,000 in our E-Trade here. And I'm doing options on them too. I'm selling calls on them, selling puts to get bigger positions. But we're down quite a bit on it because I got too excited when I got capital and sold puts early. But plays today. So I would sell covered calls on it, but yeah, since it is kind of still finding a floor, I don't know. I mean, I do think it's going to keep coming down because we broke through that support, but I just have a hard time when it's so oversold. And then the hourly has kind of kicked up bullish with this MACD crossover. So that's why I think it might kind of come up a little bit before it comes down more and just kind of trade in this range again. But it seems like we'll find a lower support just because we broke that one. But support lines aren't you know, they're not hard support lines. It can be close to it, but this seems pretty dramatic. Okay. I bought three puts today on GME. Once it broke that support, I basically bought puts on it. I thought, okay, it's gonna keep coming down, and those are just expire Friday. I don't think it necessarily is gonna go to my price target, but I do think it'll probably keep coming down. I got them right about here, so there was some volatility in it. So I paid a little bit of a premium, but I got 3. This also gives me more buying power just with the way my my other positions are. Gives me more leverage, or basically covers other stuff, spreads, whatever. Let's see. So I think they're down a little bit now, but yeah, we've got 3. I got 3 140 puts. They're basically break even. So my thesis on that was, why did you get 140 puts? Why did you get them for Friday? Friday's not much time. Typically when I'm buying options, I want lots of time, low delta or high delta, low IV. The GME is all different though. Anyways, I figured it could come down to this 135 support. So 140, I want it to be in the money, so I got 140. 140 pretty low, but yeah, that's why I got 140 and I got it for Friday. And then actually there was a bearish options alert on GME for that strike for that date, so 140 by Friday, which is kind of funny. It wasn't me, I only got 3 of them. SPX, I averaged into a call credit spread on SPX, which is a bearish play, and that's basically the SPY, but it's actually the actual S&P 500. So yeah, again, this, you know, you've heard my reasons why I think this is going to come down in the next few days. Maybe repeat one of these again and then melt back up. We'll see. If so, maybe I might pick up some calls if it's on a big dip. Or this might be the top and it might really come down. There's a lot of catalysts they can use for news right now to bring it down. I bought 4 VIX calls. Did I average into this one? I can't remember. No, because I have crazy out of the money VIX calls for basically the short squeeze. Short squeeze on GME is going to create a ton of volatility and VIX will go up. So I got those 120 VIX calls, but I don't have much time on them left. Just over a month, so if it squeezes in that time, then those probably do pretty well also. I just picked up 4 $25 calls for Wednesday. Not much time, but a lot closer to the money. So we'll see what goes on with that. And then SPX call credit spread, you saw that. So those are actually already doing pretty well. The way I did this one, I had puts that expired today, worthless, unfortunately. That's what happens when you buy premium typically. I've got a 44.10 and a 43.95. These are call credit spreads. So SPX has to close below that by Wednesday. So this one's up quite a bit because I opened this up before. It's up 37%. This one I averaged into, so now I'm about breaking even on it. And yeah, so these should do all right. This is 1,300 max profit, and then this one's 840. Don't want to go too big on them. I think actually one of these I've rolled over. Yeah, this one I think I've rolled over a couple times, so I kind of need max profit on that. But what I like is, so I'm getting this credit to open up this play because I'm selling premium, and with that credit I can buy puts if I want more exposure. So at the end of the day, if it closes just below my strikes and these expire worthless, but my puts didn't go anywhere because there wasn't volatility, then it ends up being a net neutral play. To create slow income, or I guess more consistent income, you could just do the credit spreads, but in my opinion, this is not a time to really be doing a whole lot of premium selling, because I think since we've had such a low volatility, slow melt up, not crazy low, I mean it was more stable back here, but pretty stable melt up, premiums are going to be dropping. And same with GME, premiums have been dropping. So like I say, when it's boring, buy premium. When it's exciting, sell premium. And that goes both ways. So selling premium either that you bought, or selling premium and going short on it. So yeah, that's why I'm trying to pay for the premium I'm buying with premium I'm selling, because I think it's going to be volatile and you can make much more, much faster on premium you buy if it works out. But it doesn't always work out. So this is kind of my little hedge on premium. That's it. And then Cflt, this is basically like another Snow or Datadog. It's a similar company. They IPO'd recently. And I kind of was watching the IPO, and I want to get some in my long term. So actually, I'm not showing you guys my long term, but I sold puts on Cflt, $40 strike. They have earnings coming up on Thursday. Should be good. I'm expecting good things from this company. On the chart, I mean, today they just had a big day, 6%. Everything just turned bullish. So had IPO, and then it kind of found this floor. Now we've got a MACD crossover on the daily, green candle over the 9 moving, big RSI tick up. So this is probably a pre-earnings run up. We'll see what happens by Thursday. Could stay flat, could sell off, could go crazy. Market's expecting an 8% move through the options on CFLT. I got $50 calls. They're up actually 26% already for August. So these expire in 18 days. So we'll see what happens with that. And then I actually sold a lot of premium today. Let me show you guys the trades. I share my trades on the Discord. So yeah, 140 GME Friday puts, SPX call credit spread for Friday or Wednesday. Oh yeah, CFLT $50 calls for earnings. I sold $40 August put on CFLT, so that's for long term. I'm expecting it to expire worthless, but if not, I think that'll be a good price point to buy in. Sold August 27.5 put on Corsair. Yeah, I went a little bullish today, man. It's funny, now the market seems like a top. I went bullish. Not too bad though, selling puts. I mean, if these get exercised, I'm totally happy with that. I want these in the long term. These were actually all at the long term, all these selling of puts. Thought I sold a rocket, but I didn't. Sold more call credit spread on SPX also for Wednesday, so it's another bearish play averaged into the VIX calls. I put my trades on there. Also, I totally forgot, but Rocket had news today that they're going to be financing solar. Rocket's in our long term. So news came out right here. You can see big pop in volume. This looks like it's extended hours, but that's actually normal trading day. It just had a lot of volume kick up. And Rocket's heavily shorted, heavily manipulated stock, as you can see here on the chart. Pin down, short squeeze, pin down. So this is a great price point for Rocket. MACD just ticked up bullish. Actually back here, we got this nice volume today on that solar panel financing news. So that's pretty big. Basically you can refinance with Rocket Mortgage your house and a solar panel. Most people that get solar panel finance it. And so that's kind of big. Here's the actual news thing right here. So big volume came in. We have naked calls that were losing value, and they actually, oh, it's back down 26. These actually came up a little bit and were positive for a bit today. This covers earnings though too. So that news actually, so I shared that on hot news. So right here, Rocket Company spikes. I was at 233. I shared it in general chat also before that, but that's like, as you see, like right here, right when it happened. So you could have flipped some contracts in there if you wanted, but again, Rocket's so heavily suppressed, and just so every time it goes up, it just gets crushed down until it gets a good enough news and enough volume to really start breaking out. It might just stay pretty suppressed. Maybe earnings will do that for it, and if it does, I think we'll probably see a whole bunch of shorts that need to be covered, like it happened back here. Hope you guys had a good weekend. We will see you tomorrow. Sub up, like up, comment down. Happy Bunny sticks around. Peace out.